In this video, we're going to be looking at some policies from the last two budgets that have been used to boost the supply side of the economy, and also look at how infrastructure and taxation can be used to support aggregate supply. So first of all, this year's budget is the most important. It's very common to get questions about, like, explain some supply side policies from this year's budget that might boost our international competitiveness or allow us to achieve a more sustainable economic growth in the future, or even potentially how they combine with immigration to increase the supply potential of our economy. So some examples of budgetary supply side policies: again, the lower company tax rate to 27.5%, which will eventually go to 25%. Make sure you're doing the specifics, and the idea of this is to promote investment spending, which will again boost our productive capacity. It'll also encourage foreign investment, which should boost our productivity as well. You can talk about the $1.1 billion National Innovation and Science Agenda. So that wasn't on your last SAC, but it would be a good idea to talk about how that's going to help boost our productivity, because it's creating a more, I suppose, digital literate children, or digitally literate society, which will help to become more productive in the future as well. The government committing $50 billion to infrastructure, particularly in the Northern Territory with that Beef Roads program, again is going to help boost our international competitiveness and help to create jobs in the long term. And you can also talk about the youth employment package, so that idea of the three-step program, which is trying to improve the skills of 120,000 vulnerable job seekers. And that's all about boosting our productivity, making sure that these people have got the skills to increase employment, but also making us more productive and more internationally competitive going forward. And you still need to provide the details of these policies. So it starts with employability skills training, then an internship placement, and follows up with employer wage subsidies for those who hire these people. A lot of people in their SACs just said that these people will get hired. That's not the case. They still businesses just receive a subsidy for hiring these people. Last year, not as important, but some key things. Again, there was tax cuts for businesses up to $2 million. The depreciation allowance is a big one, and that can also be included for this year because it's been rolled over. But businesses are allowing tax deductions, so the government's allowing tax deductions for all small businesses who purchase things costing less than $20,000, and that's being forwarded on to the end of 2017 now. One of the big things from last year's budget was they reduced a lot of the compliance costs associated with setting up a small business and running a small business, and that's all about reducing firms' costs of production, making them more willing to supply because their production costs are lower. There are other things to make childcare simpler, to try and get people back to work, which is about boosting our productive capacity, so giving childcare subsidies so parents will go back to work quicker. There were loans for people that were affected by the drought to help investment in those areas, so they again can become more competitive. And there was a $5 billion Northern Australia infrastructure facility that was built, which was designed to increase the productivity, particularly in the far north, by establishing new infrastructure that makes us more productive and more efficient. So, in terms of infrastructure, some key words when you're relating how infrastructure can impact aggregate supply. First of all, it's important to recognise that infrastructure boosts aggregate demand in the short term and can lead to inflationary pressures, not only because it boosts jobs, it also boosts G2 spending, so the government spends more money, and it can lead to some cost-push inflation in the sense that roads need to be built, and that can lead to inefficiencies and less productivity with things like roadworks and delays in traffic and things like that. In the long term though, infrastructure, what we say, acts as kind of like a lubricant for the economy. So it allows the economy to work more efficiently, more effectively. So when we upgrade things like roads, telecommunication networks, ports, it basically helps to relieve capacity constraints and therefore boost our future productive capacity because we don't have those bottlenecks in society. When you do get questions about how infrastructure is a supply side policy, you want to be using those words like reducing bottlenecks and increasing our productive capacity, but you also don't want to negate to talk about the more obvious things that something like building a road does, and that includes the fact that businesses will be spending less time in traffic, so that will make them more productive. It'll cost them less in petrol because they're spending less on the roads. The wages of truck drivers, it's costing them less in terms of the per level of output because they're getting things to market a lot quicker. So that's all about reducing firms' costs of production and making them more competitive going forward. In terms of taxation, tax concessions for investment is a good way to try and boost growth because it'll encourage firms to invest. Tax concessions for research and development can also be used to encourage firms to invest, as well as, and when I say tax concessions, basically I'm saying that if you invest in these things, and like that, let's say you invest $20,000, basically what you can do is that the government often allows you to claim tax back on even more than $20,000. So you can reduce, say, your profits by $30,000, even though you've only invested $20,000. So like they might give you 150% tax deduction on all expenditures for research and development. So if you spend $100,000 on research and development, you can claim $150,000 in tax and reduce your taxable income by $150,000. And all of these things are designed to promote investment, which will boost productive capacity going forward. Other taxation policies, increasing the tax-free threshold in the past has increased participation. We've talked about cutting the company tax rates, and this idea of the instant write-offs threshold for businesses that are buying things up to $20,000 to invest in new assets, or accelerated depreciation allowances. It's also important that within their policies that they're recognising the trade-off between equity and efficiency. So certain policies, for example, increasing GST at the expense of income tax can have regressive effects, and even though it's more efficient than perhaps a sales tax or income taxes, in the sense that it doesn't have that disincentive for people to join the workforce, and it's not that disincentive to work hard because you're not getting taxed on your income, it does have negative implications for equity. So it's really important that the government has a bit of a mix between what's being taxed, so that they're not putting all the tax on low income earners and not too many taxes are regressive. So replacing income tax with the GST would be an example of trying to promote efficiency over equity. One the other way, so a tax to promote equity over efficiency, was the minerals resource rent tax. So the idea there was that we would tax miners more on their profits and distribute that income to the less fortunate, I suppose, states within Australia at that time. So the miners got taxed never 7%, and that was a disincentive for them to work hard and be efficient. But it was a promoted equity in the sense that those funds were then redistributed away from the mining industry to less fortunate industries, and trying to rectify some of the problems with a two-speed economy. And you could argue that that does promote efficiency in the sense that it may help intertemporal efficiency because there might be less mining, but it will lead to a reduction in productive efficiency. Thank you.